Election Budget 2019. Catch the real-time analysis on CNBC TV 18, your budget headquarters.
Hello and welcome to the budget headquarters. Half an hour to go for the union budget. Piyush Goyal will speak at 11, we hope. There is some rumor doing the rounds that apparently the farm package may be announced by the Prime Minister himself. So we'll see whether even Narendra Modi gets into the action this time with the budget speech. But we've got a packed panel with us over the next half an hour, and many of them will continue through till the end of the speech with us. We've got in our studio Ashok Wadhwa, always there on budget day with us. We've got Ramdev Agarwal of Motilal Oswal. We've got Mark Mobius of Mobius Capital joining us from Hong Kong, and many other speakers like Nirmal Jain of IIFL, Mahesh Nandurkar of CLSA, and Sajid Chenoy of JP Morgan. But first, good morning and hello to you, Sonia.
Hi, good morning, Udin. Good to have you here. You know, we were just speaking with Mark Mobius and we asked him what is the significance of the budget, and he started by saying we don't even know whether these numbers are credible. So that's what
Mark said that?
He said that. You can ask him. But that's the issue that a lot of foreign investors have, right? I mean, the significance of the budget dwindling and credibility of the numbers. How does one address that?
Well, not just foreign investors. I think everybody should be asking those questions right now. And that, I think, has become the central thing on what do we believe, what do we base our analysis on. I mean, we've always known that the fiscal deficit number which is put out by any government, not just the India government, is a piece of jugglery. We've always known that. But right now, we've come to a point where we don't know whether that number is just a figment of somebody's imagination. The unemployment numbers which came out yesterday, which were leaked by the Business Standard, I think has put the cat among the pigeons. People are A, unhappy about the number, and B, how it was dealt with. So, you know, India was always seen as something which is not quite China. Nobody trusts or ever trusted Chinese data. India was never like that. Good or bad, we put it out. More or less put it out.
Yeah.
I think a lot of foreign investors who have the option of looking at many countries, including India and China, are now asking that question legitimately: has India become a China? What do we make of this data? I heard a panelist on this channel in the morning saying we are not going to go by any sets of data now which are put out like GDP, unemployment. We just want to go by the tax data because that is difficult to fudge. And that is a big statement, you know. So I think credibility has been shaken. And you know, you take years and decades to build trust about data in a country. It can be broken very, very quickly. You do not want to be in that position. So whatever it is, my big imploring to this government would be, or to any government would be, it doesn't matter if you lose an election. It doesn't matter if people are angry for one set of promises that you've not been able to fulfill. But don't tinker with the data, because that affects us as a country, and you will not be able to roll it back as easily as you break this trust.
So in that context, since, you know, we are looking at perhaps some people are even talking about the fiscal deficit number being met this time by some cash accounting standards or whatever. You think that's a possibility, given that last year also there was a slippage and 2 years in a row a slippage may not look promising?
No, I think 3.3% is something which the government may well announce this time. Because the way this has worked, Sonia, as you well know, is that you first decide the number, then you work backwards. It's not like you do the numbers and say, oh, my fiscal deficit turned out to be 3.6%. It cannot work that way. You say my line in the sand is 3.3. Within that, whatever I can show above the line, I will show. Whatever I cannot show above the line, I'll toss across. So you will not see a lot of things in the budget which will be off balance sheet, as we know. You know, look at Food Corporation of India. That's a classic case in point. You know, you add back those numbers, where are we? Close to 3.3%. So 3.3 has no relevance. The market only wants a signal. The signal is that, is the government going to pull out all the stops in an election year and become reckless? If it declares 3.3 or 3.4, the market will get the feeling or signal that they will not do that. They don't want to do that. If they say 3.6 and next year 4%, the market will get a signal more than the number itself that they're going to do anything now because of elections, and therefore fiscal rectitude goes out of the window. So I think we should not obsess about the number per se. We should just get the signal from the government. What are they saying in essence while putting out that number? Okay, so I'm going to go to our guests in a bit, but just before that, one word on the market trend itself, because this underperformance is something we've seen all month, right, compared to emerging markets. You think that's going to continue because of political uncertainty and perhaps fiscal profligacy as well? You know, it's difficult to say what happens on the day, Sonia, you know, because, you know, people have become, were short till yesterday, they covered up their short positions. Sometimes a large farm package might be construed by the market as stimulus, saying we don't care about what happens to long-term macro picture, etc. We care about what will happen to consumption stocks because of the stimulus which is being put out. And therefore the market's reaction on the day or for a few days may be something very different. Near term, we are still trapped in a range. Unless something major happens on the farm package, I think we remain trapped in that range. And the bigger problem, as we've discussed many times, is the broader market. People's portfolios are bleeding. It doesn't matter what the Nifty is telling you. I don't know whether the budget can change that.
Okay, well, let's get our guests on board. As we've been telling you, we have a very long lineup of guests. Ramdev Agarwal is here with us. Ramdev, hi, good morning. What would constitute a dream budget for you from a retail investor standpoint?
I mean, on the eve of this so-called political budget, I mean, election is right at the corner. To expect too much is also wrong. But my wish would be that they really look at seriously the DDT, Dividend Distribution Tax, right ab initio. I mean, from 5% in 98, it has gone to as high as 33%, which is not investor friendly or capital allocation friendly, I would say. I'm not meaning reduce the tax burden on the taxpayer, but the way you're taxing it, 22% dividend distribution tax and then 10% on top of it on the person who is receiving more than 10 lakhs dividend. So that 33%, that leads to a lot of capital misallocation at a corporate level. And that's why when the corporates don't distribute with the available resources, they end up doing some crazy things. I mean, auto company will do, textile guy will do, because you're not paying out. What we do? There is no equity outside. So I think they must seriously look at it. I am not meaning reducing the tax burden at all. But you should have a rational process whereby people can have a rational dividend policy.
Ashok, I want to ask you about direct taxes too, but I just want a word in with Mark Mobius before that. Mark, good morning to you. I'm joining in after you've already answered some of these questions, but I do want to scratch that point about this India's data credibility problem. In fact, more than the budget, the world is probably talking more about that this morning than anything else. How concerned are you? And what would your suggestion be to the government after all the confusion of the last 48 hours?
Well, I think your points are very well taken, and certainly there will be questions asked. The problem is when you get something like this in the headlines, people sitting in New York or London or elsewhere, they read the headline and say, oh, I'm not going to believe the Indian statistic anymore. And of course that's sort of throwing the baby out with the bathwater. I'm still very confident that the numbers, generally speaking, are good, because Indians, in my view, are the most numeric people in the world. So they do a very good job with statistics. But I do want to emphasize that anywhere you go with these statistics, a point here, a point there, 0.5, 0.6 doesn't mean anything, because there's so many errors and omissions that take place in the gathering of these statistics. So we mustn't be too try to be too precise. And I think your point, what you just mentioned, is very well taken. What is the direction? Where is the government pointing? Where do they see themselves going in terms of how much they're going to give out for the election in order to be re-elected, and how much of a deficit they're going to program going forward? I think that's the most important question.
Your point too is very well taken, Mark, about Indians being a very numeric people. Sometimes you wonder whether we're too numeric and therefore we can be inventive with numbers as well as we are good at it. But Ashok Wadhwa, good to see you on Budget Day as always. Is there anything, before we talk about all this, anything that one should expect from a direct tax point of view at all in this budget? Let's get that out of the way.
Just continuing for a second on the point you were making, we are a country of accountants, but we are also a country of engineers. So good balance between art and science is perhaps the right way.
You don't mean data engineering, don't you?
No.
Okay.
No. So precision is also a high quality of Indians. So I would say somewhere a balance between the two is the right answer. And as everybody said, it doesn't matter whether it's 0.5 or 0.6, so long as it's not 4 point something and 2 point something. This is an interim budget, and historically over the last 3 presentations of interim budget, there hasn't been much on the direct tax, and rightly so.
Sure.
Having said that, I do believe, given the particularly positive outcome of direct tax collection in this current year, we had projected 14%, we're likely to deliver a 16% growth in this current year. I think given that, my own sense is, at the eve of the important political event, government will want to do something for the tax-paying salaried class. Remember, when you look at direct benefit transfers, you're looking at the farmer, you're looking at the landless laborers, you're looking at landed labor, but it's the tax-paying salaried middle class that's really been hurt, and that's an important constituency for any government.
Sure.
So I would think that there's going to be something in this budget which is going to be different from other interim budgets, but largely focused on that class, and the easier thing would be to increase the limit for exemption to a much higher number, and perhaps throw in some deductions around standard deduction, etc., etc. I think a feel-good factor for that community is perhaps going to be embedded in this budget.
Okay, being a part of that tax-paying salary class, I must tell you that a feel-good factor is really what we need at the moment. But let's talk about some of the macros, right? Sajid is also with us. Sajid, hi, morning. We've spoken about the fiscal deficit at length, so I'm going to ask you about the market borrowing number that the street can digest. The common view is that an estimate of 6.5 lakh crores is something that the street will be okay with. What's your own estimate? And also, do you expect a sharp increase in CPSE borrowing, something that has caused a lot of concern amongst economists over the last few months?
Morning, Sonia. You're right. I think the market, anything below a 6.5 trillion gross borrowing number will come as a positive surprise to markets. But Sonia, let's step back for a second, and I think, make the point Ozian made earlier. There are two fiscal realities in India. One is the reality that we'll all focus on today. Markets will obsess about, is the deficit 3.3, is it 3.4, is gross borrowing 6.5 or 6.3? The second reality is the center is increasingly a growingly irrelevant part of the larger fiscal situation. If you add the center's deficit, the state deficits, central public sector enterprises, and off-balance sheet borrowing, India's public sector borrowing requirements are above 8% of GDP, 8.2% of GDP last year. Those are the numbers that really, matter for the economy, not so much the center. So markets will focus on today's reality. I think what matters for the economy is the larger reality, that we just don't have any fiscal space. So I'm getting very nervous hearing the wish list over the last few days. We need a feel-good factor, we need an agrarian package, we need tax cuts, we need SME relief. The fact is, this is a very delicate balancing act. We need to stay on a modest fiscal consolidation path. So any new initiatives announced today need to be paid for. I'm perfectly empathetic to the view that we require a safety net for farmers, but that will need to come in lieu of some of the existing welfare programs on above. And it's that 8% of number, I think, which will keep interest rates elevated, keep the Monetary Policy Committee cautious, and ultimately run the risk of putting some pressure on India's external sector. Let's not take our eye off that ball.
We hear you, Sajid, but unfortunately elections are too close for your words to be heeded in this statement, perhaps. Mark will leave us. Nirmal, I'm going to come to you in a second after I ask a last question to Mark, and he will join us again after the speech. A lot of this budget speech, Mark, is about the elections. In fact, and before we let you go, I must ask you about the election itself, because that will be a consideration in your outlook on India. The signs for the current government have not been great over the last few months. What are you preparing for this May after the Indian elections? What kind of government would you be okay with?
Well, we're preparing for a much weaker BJP, that's for sure, and the polls seem to indicate that. The ideal situation would be not too much weakness for the BJP and a coalition where they're the leading party, where they can continue to call the shots, so to speak, and continue the program of reform. That would be the best solution. And no problem with other parties coming in and being part of a coalition. In fact, it may be a good thing, because it means they'll have other voices telling them what would be the right thing to do. But we hope that they still will be the leading voice.
All right, Mark, thank you so much for joining us, and we'll of course touch base with you once the budget is over. For now, just keep an eye out on the market. It's coming off a little bit. Private sector banks are under a bit of pressure. Kotak Mahindra Bank, ICICI Bank, Axis Bank are down about 0.5% apiece. Nirmal Jain is also with us. Nirmal, morning. Thank you for waiting by patiently. What would you look out for in this budget that would perhaps appease investors?
I think it's given that budget will be populist, and they'll try to look at, for farmers, they'll try to look at middle class and lower income group. I would look out that they don't do something which is a little excessive in terms of giving away to farmers, or maybe the loan waiver kind of things, or something similar to that. That doesn't happen. And a bit of fiscal prudence. I mean, we can't expect any finance minister or any political party or government to be very, very sort of rational in these kind of, just on the eve of elections. But what I'm at least hoping is that there'll be some bit of prudence, and maybe populism is there. We are expecting it, but they won't go overboard on that.
Okay, well, right. Well, let's also get Mahesh Nandurkar of CLSA. He's joining into the conversation as well. Mahesh, I wanted to ask you about the farm package itself. What is your expectation this time around, and what do you think the street can digest?
Well, I would say that on a net basis, any new package that the government would be talking about has to be at least, let's say, like a 1 lakh crore or maybe north of that, if it's to have any impact as such on rural incomes or the farmer incomes, which is say about 50 to 70 basis points of GDP. So clearly the impact on the fiscal will be to that extent, as I said, 50 to 70 on a consolidated basis. And also at the same time, we have to keep in mind that the revenue collection, which is GST, has been falling way short of its annual target, and what kind of assumption the government makes for next year as well would be crucial in coming up with that number. So I would broadly say that notwithstanding the macro impact, but any farmer package, or let's say the below poverty line cash transfer scheme, etc., which has been talked about in the media, would definitely be a positive for the consumption stocks, especially the rural consumption stories. And if that number becomes too big, it can probably have a negative impact on some of the macro variables, and which can possibly reflect in the currency. So will to that extent have an impact on the exporting sectors as well.
Okay, well, just keep an eye out on some of these auto stocks. Maruti just came out with their sales numbers a while back. It was flat, the growth, but the stock is up 3.5%, perhaps in absence of any negative surprise. But Ujin, I wanted to come to you on this farm package. The fear is not just of a package, but it being a recurring liability. What should one expect?
There will be a package, whether it's 1.2 lakh crores or closer to 2 lakh crores, we'll see. But this is their last chance to do something for the rural populace before the elections. I think they'll put out a credible package. A lot has been said about the macro impact of the package and whether the revenues will support such a package in coming years. I want to make 2 points on what it does to 2 other things. One is what it does to the government's infrastructure capex, because you crowd out capex at a time when we do need a lot of capex, because private sector capex is still not picked up. The government is the one which has been standing behind it for the last 2-3 years. If you make a very large commitment towards the rural sector, I don't know how much, given GST collections, you will be left with to push infrastructure capex, and this is something that we need from a stock market point of view. The last man standing should not back off because he's just put out a very large farm package. That is one. B, there is a general thing that if you have a farm package, you should rush to buy two-wheeler stocks and Mahindra. Look at the numbers. What are we talking about? We are all agreed that mostly the package will come for small and marginal farmers with holdings of less than 5 acres. Let's say 3 acres is an average holding for the small and marginal farmer. You're talking about anything between 5,000 to 8,000 rupees per acre per year. Say it's 6,000 rupees. 3 acres into 6,000 rupees is 18,000 rupees a year, or 1,500 rupees a month. You give a farmer 1,500 rupees a month and you say he'll buy tractors or two-wheelers. What does he buy? So the best you can hope for is companies like Emami, Dabur, maybe HUL. You buy a bit of soap, etc., consumables, which can get some kind of a, but to extend it to tractors and two-wheelers and Maruti small cars, I think is a giant leap with no reference to the numbers at all.
Oh, in any case, many of these two-wheeler stocks are at 52-week lows. Some of them have lost about.
And the two-wheeler king is sitting on your right.
Yeah, he is. You want to bust that myth, Ramdeo, that you don't necessarily buy two-wheeler stocks when there's a farm package coming?
I mean, farm package is one thing, but actually the sector is suffering from this high
ownership cost,
high insurance cost, and now this BS6 is coming, so that will be one consolidated cost. But at the same time, it is expected that GST will come down from 28 to 18. So it will offset and all. But the demand level, I mean the penetration levels are still so low that any kind of affordability improvement, say like even this 5,000-6,000 rupees per acre subsidy, I mean it's going to be a year long without any problem with the weather and all they get. I think it's a lot of money. At rural level, 18,000-20,000 rupees per household is very a lot of money. I mean it can, at least, I mean tractor is too far-fetched, but it can definitely help in two-wheeler to some extent.
Okay, let's take a break on that note. We still have about 15 minutes, so lots to talk about till Piyush Goyal presents the interim budget. We are back in a minute with all our experts.
Election Budgets 2019. Catch the real-time analysis on CNBC TV 18, your budget headquarters.
Welcome back. You're watching the live coverage of the interim budget. In less than 15 minutes from now, we will get to know what's on the new finance minister's mind, whether he's going to do some fiscal profligacy or are we looking at some prudence. But let's get our guests back on board. Sajid Chinoy has been in conversation with us along with a whole host of other guests. Sajid, you were telling us about the market borrowing number, the fiscal deficit. So we've discussed a lot of the, the main numbers. Anything else that you're watching out for in the budget from a market standpoint, a money market standpoint that is, whether there's any provision for a bank recap? Some people are talking about a mention of a special dividend, any off-balance sheet funding. What would you look out for?
Yes. So, at some level, the details of this deficit is a little less important than normal years because all of these assumptions will be revisited in July. And so markets won't take today's assumptions as the holy grail. That said, what's the stuff you want to look for below the line to see? Will fiscal pressures again begin to rise later in the year? I would look closely at GST collections. I mean, it was very clear in last year's budget that the asking rate for GST was quite ambitious. So I would look at what is being budgeted for GST collections given the realization of this year. I would look, the obvious part, how much of any agrarian package is being paid for through rationalizing existing welfare programs. Is it coming at the cost of capex? I would look more generally at tax buoyancy. What is the nominal GDP assumption that's being budgeted, and gross tax buoyancy, is that anything more than 1.2 would be a little bit tough to achieve. And finally, as you said, to get a sense of the larger picture, is it that we've got more borrowing either off balance sheet from FCI and entities like that, or are PSUs borrowing more? That's not necessarily a bad thing if they're borrowing for capex, but if you add them all up, you get a better sense of what the fiscal impulse for next year will be going into the budget, going into the year.
What kind of credibility should we attach to the assumptions made in this budget, particularly on indirect taxes, after the FY19 experience? GST was a big letdown. I mean, we are short 1.2 lakh crores. Now, a number will be put out to get to 3.1 or 3.2% fiscal deficit for FY20. How credible would those numbers be, and how will the market take it?
So then, year by year, the one important number that we have tried to analyze in coming to the government's maths on fiscal deficit is actually the buoyancy in tax collection. This year was particularly important because GST in one sense was a new tax, and for the first full year of its application. If you think about it, at one level we are short on the GST collection, but government reduced the rates last month. And this month they have reported a higher tax collection. And as you said, that's the one number that you have to take as gospel truth.
No, it's a real number. But we've had 1 lakh crores plus a couple of times, and that's flattered to deceive.
I would agree. But 1 lakh crores after the tax has been reduced is a little different than 1 lakh crores while the tax still higher. So is it resulting in greater compliance? Is that what's happening here? Something is happening which is giving that higher number. I'd like to see how they predict and project that number going forward. In particular, if there are other concessions that are going to be given in GST, how will the velocity make up for loss in the numbers at one level? That to me is a very critical number. There's no debate that the GST numbers historically has been overestimated. But equally, for a very long time, most governments had also overestimated the direct tax collections. This is one of the rare times that I'm actually seeing direct tax collections coming up to be a significantly, well, I say significantly, at least 15%.
No, that's a good number.
Higher number, and that's really very, very heartening. If there is credibility to the projection of the GST number, and if the tax collections, largely because of greater tax compliance, continue to be robust, I would say there is clearly positive news and positive belief coming for 20, at least out of that piece. There are other pieces that need to get corrected. For example, disinvestment. One more time, we are so far away from that target, target. That number seems to be really a filler each year. And I'd like to see what the filler number for next year is to determine whether it's real or not.
That's the big thing, right? Disinvestment, what can be achieved. Once again, we're off the mark completely.
Not just the number, Sonia, the approach.
Yeah.
And what we are doing to get to that number. I mean, when this government came into power, I would think that every market analyst would have thought that there would be a lot of strategic disinvestment. We've not had one in 5 years. How do you answer that? All that we do is we get to a number of 25,000-30,000 crores till the budget, and in the last couple of months we asked this PSU to buy that, and do some buybacks, and now this time it's PFC, REC, NTPC, NHPC, and somehow we'll limp to that, close to that 80,000 crore number. But it has been such a big letdown. I remember in 2015 we were all talking about railways, big IPO, Air India, they could not even do that. So this whole divestment piece has been such a massive letdown in the last 5 years. I think there is every reason to be absolutely disappointed with it.
Okay. Well,
we'll have 80,000 crores for a target, by the way, again next year. I'm sure about that. Otherwise, how can they get to 3.1 or 3.2%?
Yeah, we have, in fact, Ramdev, seen a lot of derating in these PSU stocks because of what's happened, right? One PSU buying another. Is this a space that you, by virtue, just stay away from generally?
You don't have any choice. I mean, with the public money being managed, you can't be taking this kind of losses. Something which is not expected, I mean, the way it is being conducted, it doesn't look that they have mandate to create value. And here we buy stocks to create value. And these public sector undertakings are not managed with an idea. Though it's a commercial enterprise, they are not managed to create value in the stock market.
Everybody has been disappointed. Sonia, I will tell you, 1.5 years back, every mutual fund had IOC as one of its top 5 holdings. And look at the disappointment, the wealth destruction which has happened on Indian Oil Corporation. I think it's put off a lot of people in the market of PSUs as a basket. In fact, privately they'll tell you we don't want to touch a single PSU in our lives. We've gone wrong so many times with these this set of stocks.
Okay, well, we have, I think, less than a few minutes to go. So let me try and squeeze in one last question to Nirmal. Nirmal, whichever way this budget goes, because a lot of people are not assuming too much significance from a market standpoint, do you think the underperformance that we've seen compared to emerging markets will continue?
No, actually, market's performance will depend on many more things than the budget. And what we are seeing, the buoyancy or the bullishness in the market, primarily because China has slowed down significantly. Oil prices are low, which augurs well for macro, regardless of which government comes to power. And at least today India is the fastest growing economy. Whether numbers can be disputed here and there, but in a democratic setup you can come and criticize the numbers, probably which you can't do in China. And so between the two large economies, India will become a favored destination for investment. And of course there will be intermittent volatility given budget, election outcome. But on a medium term view, I think India stands is very well placed to attract foreign capital, and also domestic savings continue to come to stock markets. So I'm not so bearish from a medium term point of view.
Okay, not so bearish from a medium-term point of view. Ramdev, what about you? In terms of earnings, what has been the big takeaway this time around? Because there have been some big hits, right? The likes of Axis, ICICI Bank, but we've also had major misses as well. Yeah. What's the key takeaway?
So I think 18-19, all the analysts, they start with 20%, 25% earnings growth expectation. Again, there is a letdown for the current year. But next year looks to be serious. Even I am kind of buying in that overall aggregate Nifty earnings growth will be, high double-digit kind of situation, more like 15 to 18%.
Okay.
And led by basically all the corporate lenders, Axis, ICICI, even some of the PSU banks will come back. Even Finance Minister said yesterday or day before that by end of the year they should be turning around.
Sure.
So I think the NPA cycle is definitely coming to an end, and IBC process has been very, very effective. The fear of that is total. So that is going to have impact on the earning cycle. Then telecom as a segment has been big disappointment. I mean, very large segment, and all three are, both of them are bleeding. So hopefully by year end, at the back end, there should be some relief.
All right. Well, on that optimistic note, Udin, final comment: a ho-hum budget or a make or break budget?
No, not make or break. I think other factors are far more important for the market. But I think today's market reaction will be probably gauged on just those two figures again. What the government's target for FY20 fiscal deficit is. If that number is reasonably around that 3.3% mark, I think the bond market will be happy, and that will make the stock market happy in turn. You don't want to see a spike in bond yields today, because that will make the stock market quite unhappy. And the second is the size of the farm package, and if that number is not northward of say 1.5 lakh crores, just to put a random number, I think the market will be pretty okay with it. Read that as stimulus, and therefore you might see a small rally in consumption stocks.
But what they do to get to that fiscal deficit number is also important, right? If they project 20% revenue, then that may not be believable as
the market will not believe that number in any case, whatever number you put out for FY20. As I said, the market only wants a signal that the government is not willing to break the bank in election year, and in putting out a 3.3% number for next year, it will be a demonstration of that intent, that it is not prepared to do that. Meanwhile, we can see pictures on Parliament, a remarkably calm Parliament in the light of recent events about the unemployment number, and very soon we hope that the Finance Minister will be able to start speaking.
Yes, Minister.